So hope you are all in the mood of Diwali Eve. And obviously, when we think of Diwali, immediately what comes to our mind is the sweets, crackers, diyas, and a lot of gifts that we exchange and all these things. Now, what happens typically in a business is when we talk about Diwali, one more important thing that comes to the mind of businessmen or tax consultants or accountants normally is, am I eligible for input tax credit or not? Where should I pay tax liability? Where should I, not pay the tax liability? So these kind of questions are quite common for everyone. And this video is specifically for those kind of questions. And what we have tried to do is that we have tried to categorize that into 5 key or important questions which normally is faced by every businessman when it comes to these kind of Diwali gifts and Diwali related activities and transactions. So here we go with it. So question number 1. Naturally, yes, we do exchange a lot of Diwali gifts. So whenever I am giving Diwali gifts, should I pay tax liability on those gifts? Right? So to answer to it, as per section 7, subsection 1, clause A, it's very clear when it comes to the scope of supply. A transaction is considered as supply in GST only if it is made for a consideration. If there is no consideration, there is no supply. So which means gifts, naturally you are not going to charge any consideration for that, right? So it's going to be free of cost. So because of which there is no tax liability at all if it is given by way of gift. But there is one thing that we have to be specifically aware of is Schedule 1. So Schedule 1 is a deemed supply wherein even though there is no consideration, there are some transactions which are considered as a supply, and the valuation mechanism you need to refer to the respective rules, right? So here the important point in this important para in Schedule 1 is the gifts which are given to related persons or distinct person. Most often we will not come across gifts which are given to distinct person because distinct person is nothing but multiple registrations within the same PAN. But when it comes to related persons, yes, definitely gifts could be given during these kind of festival seasons. Here the exception is that even though it is given without consideration, just because it is given to related person, definitely tax is payable. But one more thing that we also have to look into is Rule 28. There is a last proviso which says that if the recipient is eligible for full input tax credit, then the value is nothing but the value that is declared in the invoice. And one more thing that we have to refer to is a very recent circular on this ISD mechanism and the cross charging for distinct person, wherein it has been specifically clarified that because of this particular last proviso, if if the recipient is eligible for the full input tax credit, then naturally the value is whatever be the value that is declared in the invoice, which can even be 0. So which means to say that when you are giving Diwali gifts to your related person also, if that related person is eligible for full input tax credit, then no problem, you don't need to pay tax liability because the value can even be 0. But if that related person is not eligible for full ITC, then you have to definitely pay tax liability because it is considered to be a deemed supply, and you need to refer to Rule 28 for the valuation mechanism. And the next question that comes to our mind is what happens when these gifts are given to employees, right? So when it comes to employees, we need to understand that the same Schedule 1, it specifically states that any gift which is given to employees per annum per employee up to 50,000, you don't need to pay tax liability. But one more thing we have to also understand is when it comes to employment, it's all about how you formulate your contractual agreement. Because what we call it as festive gifts, it can clearly be even covered under the employment contract itself. As in, there are a lot of corporates, how they structure is that the festive incentive would be given based on the performance, and this incentive would be given in the form of these kind of gifts, which you technically call it as perquisite, because it's only that you call it as gift in your general parlance. But when it comes to GST law, if it is clearly covered under the employment contract, then what is given as free of cost, it's not actually a gift, rather it's a perquisite which is covered under the employment contract. And relating to this, there is also Circular 172 which has been issued. So the point here is it covered under the employment contract? If it is covered under the employment contract, then it is not at all a gift. It is nothing but a remuneration which is given by the employer to the employee as part of the employment agreement. And hence, this 50,000 limit itself doesn't apply because it's nothing but as good as a salary. It's not even a gift. So you can go to any value, that is not a problem, but that should be very clearly covered under the contractual agreement, right? So in those kind of situation, you don't even need to have this limitation of 50,000. But if it is not covered under the contractual agreement, the employment contract, then the limit is 50,000 per employee per annum. Until then, tax liability is not applicable. And moving on to the third important question that comes to all of us is, for Diwali naturally it's the sweets, right? So when these sweets are distributed to the employees, can I avail the input tax credit or not? The answer is a very clear big no, because sweets are nothing but food and beverages. So food and beverages per se, the ITC is clearly blocked under section 17 subsection 5, and hence definitely for Diwali sweets which are distributed to the employees, input tax credit is undisputedly not eligible and you cannot avail the credit. But what about the other sweets? I mean, what about the other gifts? That's the next question, right? So question number 4 is, when it comes to the Diwali gifts other than the sweets which is given whether to your clients or to the employees, whomever it is, whether input tax credit can be availed or not. This is a very important and a critical question because it's also being disputed in most of the times. So when it comes to GST law, section 17 subsection 5 clause H very clearly states that goods lost, stolen, destroyed, written off or disposed of by way of gifts or free samples, input tax credit is not eligible. And hence by default, the stand which is taken by any department officer would be that these credits are ineligible. But now when it comes to the taxpayer's perspective, there are a lot of taxpayers who are disputing this position, because though I call it as gift, it's not that I am giving free of cost. I give these gifts to the customers or the clients because end of the day I am getting business out of them. This is nothing but a business promotional activity. So indirectly it is a cost for the company, and these costs are definitely being factored when I am deciding on the pricing of my products, be it your goods or services, whatever be it, right? So indirectly it's not that I am not charging this, but I am including it in my pricing. So on those lines it should be considered, and ITC should be allowed is the contention of the taxpayers in all these kind of disputed matters. But having said that, it's very clear from the revenue perspective, these kind of credits are definitely always being disallowed. So I would suggest it this way: if you are a very conservative taxpayer, then you should not avail the input tax credit. But if you are a very aggressive taxpayer who is definitely wanting to avail credit on this because it's your business promotion expenses, be prepared for a litigation, and you need to figure out how it's going to take its own shape in the future. So as far as the gift is concerned, as I said, by default it is ineligible and it is being blocked. Still, there are two circumstances wherein the ITC can also be availed. It's something which is linked with what we have already discussed when it comes to the output tax liability. When it comes to related party, because the related party recipient is not eligible for input tax credit, if you are discharging your output tax liability under deemed supply in schedule 1, then because you are discharging the output tax liability, you cannot call it as a gift anymore. Definitely you can avail the input tax credit. This has also been clarified in circular 92 if I am not wrong. So on those lines, credit can still be availed on the gift provided you have actually discharged the tax liability in those kind of scenarios covered under schedule 1. One more exception, as we also discussed, when it comes to employment contract. So employment contract, if those kind of gifts are covered under the employment agreement, then you cannot call it as gift which are given for free of cost. Rather it takes the color of employment remuneration or whatever you call it as perquisites, and hence these kind of gifts which are being purchased, definitely credit can be availed. And the last important question that comes to all of us is, what kind of promotional activities that a business can engage in so that the cost can be optimized, because you don't lose out on the input tax credit, at the same time you don't end up paying additional output tax liability as well. So some of these kind of promotional activities are even dealt with in the circular also. So one or two such things which I can explain you is buy one get one offer, right? So typically these kind of offers will be given during Diwali or any kind of festive season. So what happens is, though it's called as buy one and get one for free, it's not that it is given for free. Whatever is the customer, whatever is the charges that the customer is paying, it is typically for both these products together. So it's nothing but a composite supply or mixed supply, which we need to evaluate on a case to case basis. But having said that, it's not something which is completely given as free or as a gift, but rather these two or three products are being combined together and it is made as a supply, for which there is a single price which is being charged, and hence you cannot call it as a gift, right? So on these lines, the tax liability is to be discharged considering whether it is composite supply or mixed supply, whether it is naturally bundled or not, whether there is a principal supply and an ancillary supply applicable or not, or whether it is just a mixed supply. So on these lines, the output tax liability needs to be discharged, and definitely ITC is eligible. There is no need to reverse the input tax credit. This has also been clarified in Circular 92. And one more other popular scheme is buy more, save more. So typically if you are purchasing for 1000 rupees, you get 10% discount. If you are purchasing for 2000 rupees, you get 20% discount. If you are buying for 5000, you get 30% discount. So these kind of schemes are also very common. When it comes to discount per se, I put it this way, there are two type of discount always. Because of discount, you don't need to reverse the input tax credit, that's for sure, right? Because discount is nothing but there is a reduction in the output tax liability, but that doesn't mean you are giving something for free of cost or not in the form of a gift, right? So just because the value of the output tax liability comes down doesn't mean the input tax credit has to be reversed. That's not a problem. But one thing that we have to carefully evaluate is, how is this discount given? Is this given as part and parcel of the invoice itself? Then naturally we can reduce the discount value, and whatever be the net price, net of discount, that is going to be the taxable value on which tax liability needs to be discharged. But when it comes to these kind of post sales discount, right, section 34 is applicable because it's going to be issued in the form of a credit note. It's very popular, especially for these kind of festive seasons as well. When it comes to these kind of B2B transaction distribution segment, they do follow it. There are a lot of schemes like volume based discount or annual sales based discount, because all these things cannot be determined at the time of sale itself. It's totally based on how the overall performance has been, and then it will be given at the end in the form of a credit note. When it comes to these kind of discounts which are given in the form of credit note after the supply, section 34 is applicable, and you need to refer to section 15 subsection 3 for the valuation mechanism. One important criteria here is that the recipient should have reversed the input tax credit correspondingly if the supplier wants to reverse the tax liability to the extent of these kind of credit note discounts. So if you are a supplier, if you are very confident that your B2B recipient, that is your registered recipient, is going to reverse the input tax credit to the extent of your reversal of tax liability for these kind of credit notes, then confidently you can go ahead and issue a credit note with tax liability reversal. But if you are not sure about it, this is also a common practice that the suppliers will issue financial credit note, which means there is only going to be a credit note which is issued to the extent of these kind of scheme based discounts without reversal of the tax liability, in which case the recipient also need not reverse the input tax credit. So on these lines, it's very important that if you are in business, you need to structure your transaction in such a way that you are neither losing the input tax credit nor end up paying unnecessary tax liabilities as well. So an optimum structuring will definitely help you to save on the tax cost. And one more thing, as I already indicated, when it comes to employment contract, whatever that is given to the employees, as long as it is covered as part of the employment agreement, to that extent input tax credit can also be availed, and at the same time you can also save on unnecessary payment of output tax liabilities as well. Hopefully this video would have been definitely helpful for you. Have a very safe and happy Diwali. Wishing you all a very prosperous festive occasion. Thank you so much for watching this video. Stay tuned for more GST with Saradha.